We have some breaking headlines now on Google and Verizon, and it has to do with so-called network neutrality. Google and Verizon making a proposal that would make the FCC's wireline broadband openness principles fully enforceable at the FCC. In fact, enforceable, Mark, with a $2 million fine.
That's right. Google and Verizon saying they support the FCC's current broadband openness rules, and Google and Verizon proposing broadband providers offer new services. Joining us on the phone, Darrell West of the Brookings Institution. Mr. West, welcome to Bloomberg News. Thank you so much for joining us this afternoon.
Thank you.
Was wondering if we might get your initial thoughts on what Google and Verizon have been reporting today.
Well, it certainly is a tidal wave in terms of technology policy, because previously Google has been a very strong supporter of net neutrality and openness on the Internet. Now with this agreement, they seem to be poised to allow tiered pricing of Internet services, and so really for the first time that will open up the possibility of creating different prices for different applications over the Internet.
And what might this tiered pricing mean for the consumer?
What it means is the Internet is going to become more like other parts of the economy. For example, if you're driving down the road, there are the free highways and the toll booths. Essentially, we are going to recreate that same type of situation over the Internet. There will be companies that are going to be willing to pay higher prices in order to get speedier applications over the Internet.
So essentially, Darrell, is what Google and Verizon are doing here, are they sort of stepping into the breach that they think the FCC has not sort of clearly filled?
The problem is the FCC has not been willing to date to clarify what the rules are. So we're starting to see private companies reach their own agreements and announce how they're going to handle these types of issues. If the federal government were taking action, I don't think we would be seeing commercial providers reach these types of agreements.
Well, I guess the question is, what does the FCC do now? It's sort of Google and Verizon sort of saying, your move. I mean, we think that this is what's necessary.
When you have big companies like Verizon and Google announcing their own agreements, it puts the FCC in a very difficult situation. I mean, the FCC could still stand up and make its own policy rules, but when you get the big players reaching their own agreements, it actually makes it much more difficult for the FCC to announce its own regulations in this area.
Well, is this something that could perhaps provide a framework for net neutrality legislation in Congress?
It could provide a framework. It's going to be sharply contested. Open network proponents are going to be very upset with this move. But this basically is really charting what is likely to become the next stage of the Internet.
Darrell, when we talk about a $2 million fine here, does that seem, first of all, is it reasonable to have a fine? And second of all, does that sound like a reasonable amount to you?
Well, it's certainly a fine of a sufficient magnitude to discourage bad behavior. So basically that is part of what the FCC has been talking about. So I think that is a sufficient deterrent to some of the worst abuses that people worry about.
And Darrell, could I ask you in your last 30 seconds here, what happens if there aren't net neutrality rules in place? What will the landscape look like?
The landscape is going to move towards differential pricing. Essentially, we are likely to have different prices for different applications. Videos are probably going to require higher expenses for companies that are delivering them. Those costs are likely going to be passed through to consumers.